and welcome back to yet another exciting week of the Lazy Money Game. In this week's episode, I'm going to give an update on my portfolio since it has been quite a long time since I posted the last video on 1st of May. So let's dive into the details and see what has actually happened. The first thing we notice is that the value is significantly up and at the same time that the cost has changed. So if we go to the portfolio values tab, the last time I published a video was back in week 17, so now 12 weeks later, you can see that the portfolio has increased with more than $20,000 in value, but at the same time, the cost has also gone up with roughly $10,000. So this change is actually so significant that my graph has updated since I have now passed the $250,000 mark, meaning more than $250,000 US. So you can see here now the top is 300,000 instead of 250 since it is adjusting automatically. And when you take a look at this graph, then at first glance, this looks actually pretty impressive. But without comparing to the S&P 500, this is a measure half done. So let's go the extra step and actually compare to the S&P 500. So the way I do this, I take the value change, meaning I take the value of the portfolio today minus the value of the portfolio at the beginning of the year. Then I have the cost at the portfolio now minus the cost at the beginning of the year. So you can see how much I have invested this year. Then I take the difference between the value change and the cost change. Then you can see I have my gains of a little more than $10,000. That gives me a year-to-date performance of a little more than 4%. So the question I can now ask is this good compared to the S&P 500? And it is very easy to compare with the S&P 500. I simply just Google S&P 500 and click on the year-to-date, and you can see that the S&P 500 is up more than 18.5%. So even though my portfolio is up, I'm being absolutely crushed. So if you are simply just a passive investor holding the broad market, then you would be crushing my performance currently. So this is a perfect real life example about how much humble pie you need to be able to eat if you want to pick individual stocks. Because from time to time, you will experience situations like this where you are significantly lacking the market. The question is, can you stay true to your strategy and continue to push on? I'm really happy that I'm not a hedge fund manager who would be forced to sell out a lot of my shares since I can see all the competitors are doing much better than I do. Luckily for me, I'm just a small private investor, so I can do whatever I please. And if you are a regular viewer of this channel, then you know what I please, namely my dividends. So if we go to my favorites tab, namely the dividends tab, then you can see that May has been really good. I was so close to getting to that $800 mark, June 345, and July so far 256. And at the same time, you can see here that the estimated yearly income has significantly increased as well. So let's look at the news regarding that. Let's start by looking at the dividend increases, since Citigroup has increased their dividend by 3.9% and Bank of America has increased their dividend by 9.1%. And finally, if we go to Activision Blizzard, we can see here that last year they paid 47 cents per share, and they did that in May. And now they have declared a dividend of 99 cents per share, which would be payable in August. And the important thing to note here is the comment. The merger agreement enables the company to declare and pay one regular cash dividend for fiscal year 2023 of up to 99 cents per share prior to and not contingent on the closing of the transaction. So this is an increase of more than 100%. And the best part is that it is not contingent on whether or not Microsoft is allowed to buy Activision Blizzard. So these are three major updates on the dividends. If we then take a look at the shares in the portfolio, since naturally I must have been adding something additionally since you could see that the cost has changed. So let's take a closer look at that as well. So jumping to the overview, you can see that the additional line which has been added is CVS Health Corp. And if you're a regular viewer of this channel, then you will know that this is a company which I have previously had in the portfolio. So as you can see, I have bought 140 shares for which I paid a little less than $10,000. This gives me an additional annual income of $338. Then of course I have to pay the 15% withholding tax, meaning that this is roughly $285 in additional dividend income. So if we go back to the dividend income screen here, this is why I am up a little more than $650 in estimated annual income. And if we go to the history tab here, just to show you that CVS Health Corp has been in the portfolio previously, I bought for $5,000 previously, which was around $71 per share back at that time, and then I sold them at a little more than $100. And this is where I was fortunate to sell them when I had to, due to the increase of prices for Revolut. And now I have bought back in at a little less than $70 per share, since I still believe that there is a lot of value to be gained if I'm just patient enough. So personally for me, this is also a trip down memory lane, since 3 years ago I posted the strategy in episode 4, where I also used CVS Health Corp as an example. And I have learned a lot since then. So instead of just trying to give you a brief explanation for why I have bought into CVS Health Corp once again, let me take the opportunity to actually provide you with a link to someone else who has done a much better job than me in explaining why this potentially is a value buy. The only additional info which I would like to show you before I show you the analysis, that is this Open Insider, where you can see what the insiders has been doing. And as you can see here, we had an insider buying at a little less than $70 per share, buying 14,000 shares, meaning 100 times more than the amount which I have just purchased. So allow me to introduce you to a channel called Rational Investing with Cameron Stewart. So instead of me just trying to rip off his videos, why not just give credit where credit is due and leave a link in the description to his videos about CVS Health Corp and why they potentially are a value buy at these prices. He explains this in much further detail than I would like to go into. And as always, when I'm buying something here, I'm simply showing you what I'm doing. I'm not telling you to go and copy paste what I'm doing. What I have done here is I took a calculated risk, meaning I believe that this stock fulfills my criteria for risk and reward, and I'm willing to lose everything which I have invested into this company, since if you're not willing to do that, then you should stay out of individual stocks. And I believe the biggest disclaimer I can give to this is, look at the performance of my portfolio this year compared to the S&P 500 and say, well, you can see that I'm clearly willing to perform worse than the market and follow my strategy. But why would you do that if you can just be lazy and just buy a market index fund? So now that we have covered the latest purchase and the dividend updates, then let's have a chat about the biggest position in my portfolio, namely Activision Blizzard, since as you can see, the stock is severely up compared to 1st of May when I posted the last episode, since there has been rumors going back and forth on whether or not Microsoft will be allowed to buy Activision Blizzard, and so far the market seems to like the news which they have had, namely that the FTC has been blocked, so their lawsuit against Microsoft doesn't seem to hold up, or at least it is put on hold. So the market reacted strongly to this, pushing the stock price higher. We still do not know when a merger will take place or even if it will, but it seems to be much more likely now than it has been previously. One thing to note here is that Buffett has sold more than 5% of his stake in Activision Blizzard during Q2, just to put into perspective that even though this might happen, the best investor of all time still wanted to make the profits when he had them. So time will have to tell whether it is a good idea or not to hold on into this big position in my portfolio. So I believe this covers the most important updates on the portfolio since the last episode on 1st of May. One question that I have received time and time again is, how much do the value of your portfolio need to be before you are actually financially independent? So what I have done is I have added a couple of lines into the goals tab here, and if we go here, then you can see if you have a portfolio that pays 3% in dividends and you need to have $4,000 per month, which is the equivalent of $48,000 per year, well, at a 3% dividend, then you need a portfolio size of 1.6 million. If we then use the same numbers, but with the actual dividends of my portfolio, since if we go to the dividends tab, we can see that the estimated average yield is 3.18% for my portfolio. That means that the portfolio value should be roughly 1.5 million. And finally, just to give another estimation is, if we instead have a 4% dividend, then the portfolio value needs to be 1.2 million. Then the line underneath is, how far am I on the journey? So if it was 3%, then with the current value of my portfolio, then I'm 16% of the way. But with the actual dividends, which I am estimated to receive, then I'm almost 17% of the way. And if you assume a 4% dividend, then you could say that I'm actually 21% of the way. So this is just an easy way to try and estimate how much wealth you need to accumulate if you want to be able to live purely off dividends. So this actually covered the essential updates for my portfolio. And if you're wondering why it has been almost 3 months since my latest video, well, I needed a break. And to be honest, I think it is a little too much for me to post videos every single week. And at the same point, it is perhaps not that interesting to watch a video every single week. Not that much happen from week to week. The whole purpose here is actually that not a lot should happen from week to week. So this actually sums it up for yet another exciting episode of the Lazy Money Game. So feel free to send me questions if you have any in the comments down below. And if you have enjoyed the content, then please leave a like or subscribe to the channel. It really helps me out a lot. And until I see you next time, bye.